Welcome to the second think tanking session, and it's all about a continuation actually of the introduction into the value of data, and so that one can discuss about leveraging of the value of data. But the only reason, as we said in the morning, why we became interested in the issue of leveraging the value of data is because of the central bank's Bureau of Standards, statistics, and so on. So rather than say leveraging value of data, one would say standards or central banks and data, because it's not the data that is, the data needs to be understood its value within the context of our inclusion initiatives. And in the morning we touched a bit on the national statistics offices and the value of data for national statistics offices. Hopefully some of the national statistics members of the network are online, and also together with the other initiatives, the 6th initiative that Smart Partnership emerged in the last few years. But
Mr. Chairman, Chu joining the teleconference.
The welcome Chu. But the issue was that the Smart Partnership networks evolved their own interests and how they apply Smart Partnership within the context of the network of statistics standards or financial inclusion, separately from being interacting with each other. And what happened was, in the last 2-3 years, it was very clear that there is no possibility of discussing the issues that the governors have got in relation to mobile technologies and everything else that follows, and probably in relation to the data that is emerging from these financial transactions, without the presence of or the understanding of data, and without the presence of probably standards or statistics or national visions and so on. So this particular session makes two particular attempts. One is to bring out the value of data within each context, but also secondly to try to see how, because of the data, the interaction between the two are imperative and they are demand driven. It's not that somebody mandated somebody to do something, it just happens, self-organized. So we will start with again, what is data or what is big data. But what is data? We had from Professor David Hand and from Tai in the morning, but there is another very quick definition. I was finding that in Science Museum the other day, which if you say museum that means history, but in fact they weren't talking about history, they're talking about current. They say data is D in data for dimensions. That means it can be large, small or big, but A, data, for automatic. T is for time, real time. And probably A is for artificial intelligence. So data, if one wants to think about data with the key dimensions about it, these are probably the dimensions one is raising. So standards, Alan. Alan, you are together with the standards inclusion, quality standard inclusion group for a number of years now, and we benefited, and everybody benefited from being together with the British Standard Institute and all the national standards institutes from the Caribbean or in Africa, in Malaysia, benefited from quite a great understanding that you had in this interdisciplinary, intersectoral, interdiagonally, vertically and horizontally type of issues that links the key issues where data becomes valuable. So Alan, for those who are kind of in the Smart Partners group at large and those who haven't met Alan yet, he is a CPTM companion, an award which he received last year for the great involvement he had in the last few years alongside his group. And he was obviously he's an engineer, but of a particular type. So Alan will explain that so that you understand where he's coming from. And he was obviously a former Secretary General of International Organization for Standards, and as part of our group, at least he raised the attention and interest of heads of government fellows and heads of state about the strategic nature of standards. And alongside David from British Standard Institute and Scott and all his colleagues, we've been able actually to have probably one of the first executive brief to 52 heads of government last year before the Commonwealth Heads of Government meeting about the fact that standards are not simply a technical issue, technocrats to deal with at best, but simply they are kind of strategic tools, and the data will make that point even more than otherwise it is the case. So Alan, you just give us a short introduction and then the other colleagues will follow. Please.
Well, thank you, Mihaela, and I would like to give an introduction to the session this afternoon. And I will come to standards at the end of this introduction. First of all, data. The digital revolution has increased in an order of magnitude which we cannot imagine, the volume of data. Just think that all the data we have accumulated to date is less than 1% of the data that we will generate in the next 10 years. Well, when you think about that, this is because of the digital revolution. Yeah. And if you relate this to some of the issues that economies in development are faced with, access to international markets, climate change, security, agricultural information, climate, health, and so on, the volume of data is a source of solutions if you are able to exploit it. Mm-hmm. And the difficulty is precisely to exploit it. Big data is characterized, I will take your letters, but big data is 5 V's. It's volume, too big to be treated locally, velocity, it comes in abundance, variability, because there are all sorts of kinds of data, veracity, whether the data is good or not, and you can have confidence in the data that you use, and variety, because data comes from many, many sources. So the 5 V's of big data. Now, how do standards relate to that, to this massive arrival of data? First of all, you cannot deal with data today in a national dimension. You have to deal with it in an international dimension, because data is exchanged and generated across borders. So I will talk about international standards, because they are the only ones really relevant to our subject. First of all, standards come in when it comes to capturing data. How do you codify an information? How do you codify? And there are many standards for that. This morning I took the example of the PIN code, where you are identified by a computer to be able to take money from the cash dispenser. But there are many, many codes that are used to describe and codify the data. Then you need to be able to exchange data with somebody. And standards come in there too, to give you protocols to be able to exchange data with somebody else or with a machine. Then you have to be able to exploit the data. How you're going to organize the data in a way that you can take results or make statistics or draw graphs or draw information or conclusions or interpretations from the data. There again, standards come in. And then you have to check how you manage that data. You have organizational and managerial aspects of managing the data. And finally, you have to ensure that the data that you have is safe and safely managed. This is the security issue. Well, on all these issues, the international organizations for standardizations are highly involved. The three apex organizations, ISO, IEC, which is the International Electrotechnical Commission, and ITU, the International Telecoms Union, have all recently reflected on their orientations on big data. And you can find that on the internet, that they are very busy actively looking at priorities for international standards in these areas, where there are already quite a few. But they are not the only ones. And one of the difficulties also is that standards themselves, and I will finish on that, are themselves data. Because you take the collection of 20,000, 21,000 I think now, of ISO standards, and then 10,000 standards from IEC and ITU and so on. So when you are developing an economy, you have to use that data, which itself has become big data. So standards themselves are part of big data. So this is just the introduction of the subject, the relation between big data and how international standards, and I cannot see that this can be done at the national level. Now, for developing economies, you need to make the best of that big data which is available. And that's the subject of this afternoon.
But just a little bit about the ISO type of organizations who are, you know, of whom all the members, there are others of that type, are dependent. ISO itself is a data of data of data.
Well, if you take...
The nature of ISO, because of the nature of standards, is going to evolve. So we are very dependent on ISO to try to do that, so that to be able at a national level to kind of...
Well, as always, the national standards bodies are the go-between these international organizations and their national stakeholders. In the area of information technologies, I think it's 13 or 14% of the standards produced by ISO relate to information technologies. So that the national standards bodies have a responsibility in monitoring what is happening in this area and bringing that information to their stakeholders, whether in the financial sector, in the technical sector, in research, and as I said, on the issue of big data, there is currently a lot of activity going on in these organizations.
This morning you sent us these approaches to establish interoperable ecosystems and so on big data that probably you want to show it. Already whenever you are going into the context of start-ups and banks and so on, they refer to the need for interoperability type of requirements, and then immediately interoperability is related to standards. And I felt very sorry for Nick sometime in February when there were these 159 or so banks and start-ups at level 39, and he was the only one having to receive from everybody the request for do something on standards. Mind you, they didn't, everybody talked in a different language about what was the value of data for themselves. So there was a need for some sort of even definition standards, which is the case at the moment. So ISO has a very big role. We'll come back to you, David, but the issue of standards came about also recently by the way of the hype, one would say, of blockchain technology, which is part of this landscape, emerging landscape of digital technologies, that is financial technology or blockchain technology in relation to financial systems. So I was wondering if probably we might go, while Eve and Ante are brought online, we may go straight to David to tell us about the, David or Mike?
The development of shared ledger technology, so blockchain and shared ledger technology. This is a very new environment. It's been created over the last 7 years, but it probably in the last 15 months, it's a major driver across financial services. And it has the real potential of changing the way that people interact across financial services. It will break down barriers. It will enable financial inclusion across countries. But of course, given the topic of this presentation around standards, clearly standards are key because of that breaking down of barriers. It will change the trust model out across those organisations. It'll move from centralised trust, which people have today, to decentralised trust. There'll be cultural change. There's real implications that new companies, and David will talk a little more about fintechs in the future soon, but new companies will bring in radically changing technology which will affect countries. There will be the introduction of new virtual services. Rather than currencies, I would call virtual services. But really, to me, what blockchain and some of the new technologies will allow people to do is deal directly. So it'll be very much peer-to-peer. Inherent within blockchain today is a level of security, control over data. Part of the design point about blockchain is that it creates an immutable record, something that cannot be changed. So, as we were discussing over lunch, it does have the potential impact that a contract that is started 5 years ago will have a significant change because of the change in foreign exchange. But one of the benefits is around improved reporting and analysis of data. It will allow, when I mentioned about centralised, moving to decentralised around trust, it will allow anyone with the right permission to access that data and understand what has gone on. Much of the drive towards blockchain today is around technology, I would say. But there are other implications that are key. One is legal standards, the other one is business. Blockchain will, in effect, change the business model, the way that processes operate within financial services. I had a discussion this morning with somebody in IBM who heads up financial markets, and we were discussing where it sat on the hype curve. And we agreed that blockchain as a technology is something that is here to stay. It's something that won't change. It's like the internet or the web. How it is implemented will change, and how it complies to standards and data standards and control standards will be critical. My view is, standards need to be implemented around this technology. And I say around the technology, the focus today is very much around technology interconnectivity. Standards that, though, also need to be moved up into the area of the business and legal area, how contracts are constructed using blockchain technology. Because one of the major effects of this new disruptive technology is that it's going to change. One, I said the cultural model. It's going to change the way that people interact with financial services. But it is also going to dramatically change the operational and systemic risk across financial services. So it's really an opportunity and a threat. New entrants, by the nature of fintech, coming back to the fintech aspect, new entrants and new companies can claim that they are blockchain compliant. They have blockchain capability, but at the moment there is little or no due diligence or control over that. The biggest risk, as I see it, is not necessarily the large corporation, the established corporation that's been around for 20 years or 30 years or 40 years, the Microsofts or IBM, who are party to this blockchain technology. It's the new entrants, the Googles of this world who develop a new blockchain app that is then used by a global community, and they don't understand the implications of mega payments or large payments going cross-border. So there is the need for standards. There is the opportunity for, with this technology, this disruptive technology, of improved reporting and understanding it. But really, as I said earlier, it's a disruptive technology that is here to stay. I would argue. How it is ultimately implemented.
Mike, just a little bit about the.
Sorry.
You helped our group
Yep.
to make a brief, one of the first briefs to the finance ministers, Commonwealth finance ministers, and all the central banks in September, and World Bank.
Yep.
And one of the things actually that we discussed today was related to data, because the blockchain could also, looking from the data point of view, the blockchain technology would actually be related to distributed data sets.
Absolutely.
And what you can do is to scale up, scale up the ability of processes that are taking place.
Yes, absolutely.
And to increase the trust, to increase the transactions. But at the same time, you introduce the issue of systemic risk because of that. So could you, because it's related to the data more than...
Certainly.
Yeah.
So absolutely, one of the key aspects.
And why is that important for the banks?
Well, so one of the key aspects, as I see the development of blockchain, is that as I mentioned, that the data which is stored in the blockchain environment provides the capability of changing the operational risk or the systemic risk model. From an operational risk perspective, it means at a technology level, it's more resilient, it's more secure. As I said, it's immutable. The issue with systemic risk, why it's important to the central bank governors and the finance ministers, is much more towards the fact that there's potential for losing control. So the data around payments and large payments is in the hands of third-party organisations. So it's not centrally managed, as I mentioned earlier. The trust is not at the centre. It's decentralised, so it's distributed. So there's a general opinion that with blockchain, that operational risk and therefore systemic risk will reduce. The opinion that we had and generated in August was, in actual fact, there's potential for it to increase.
Okay. Well, I mean, the central banks, like the Bank of England, isn't it, in July last year, were one of the first, in June 17 actually, when the governors were here.
Yep.
They that's Financial Times, Bank of England to shake up banking with new fintech accelerator
Yep.
within the bank. And that was an institutional innovation which was a proof of concept, more or less. And they don't want to get involved with anybody in a way that they are, until they are certain that the systemic risks that bring in the financial technology with blockchain and so on. So
Yes, so picking up on that point, I mean, one of the things that I've
the
seen
fintech transformation.
yes, around fintech is that there are each of the major banks, I would say, around that I have knowledge of, have a fintech or innovation type lab. They bring in third-party developers, suppliers, and such as the Bank of England, they've developed the fintech lab. But they're using that lab and innovation centres to understand how they can capitalise on some of these new technologies by bringing in a degree of governance and control from the centre. So somebody mentioned earlier, it's better to be within the party looking out rather than on the outside looking in. You mentioned about level 39 and fintechs. So I was party to a fintech program that was running, I won't mention who, but the only person, fintech programs are designed around small companies getting funding for further development work. The only person who got funding through this program was somebody who had the PowerPoints that described what blockchain was. He had nothing else. He didn't have any application, he didn't have any development, he didn't have any system, he had a PowerPoint, and he got funding. And the risk, as I see it, is that you have a financial institution or financial services company that hands some of their core processing to one of these fintechs, and they don't understand what they've given away.
That was a point. Charles Bean made, who's coming to this, that actually the capacity for disintermediation
It's
is one of the
enormous.
things, and actually what one would like is the capacity to block disintermediation selectively. In other words, to say in certain circumstances you want an authoritative intermediary because it gives certain guarantees. I don't know, does the technology permit that, or is it inherently contrary to the whole principle of blockchain?
That's a good question. It does actually. There is the ability to do that because you have unpermissioned blockchain or you have permissioned blockchain, and if you're using a permissioned blockchain, it is a degree of control over that. So you can determine who does what from a technical perspective. Still doesn't mean necessarily that people won't be able to get around that.
Yeah.
But blockchain is only and always related to bitcoins only, or is it now?
No.
It's nothing. That is an initial implementation of blockchain that.
An initial application of
Yes,
it.
it was an implementation that now that the technology has moved on leaps and bounds. There is established cross industry and cross community a consortium called Hyperledger, which is trying to establish standards and governance and control over what is being done where.
And correct me if I'm wrong, and I might be overstating this slightly, but my understanding is that ultimately every invoice essentially could be housed within a blockchain infrastructure. So every transaction then is tracked.
Every bit of data, everything you use. We had comments about the census and this morning about the failure of an IBM system to do census. And of course, if it was actually done within a blockchain environment, it wouldn't necessarily be a problem, because you would have a record and you would know exactly where you were, because there would be controls over those records.
And Alan spoke about the need for international standards in these areas that are inherently international by design. And there is a new ISO committee being set up with the Australian National Standards Body running the Secretariat that will look at blockchain technology, and that is driving a programme. Because I think it comes back to a conversation I was listening to earlier about the lag between these innovative, disruptive technologies and legislators and standardisers separately looking at these topics. And I'm hoping that we're getting quicker, because I think innovators are seeing more and more that if they're going to plug and play, then they can't set off on a path without taking everybody else with them. And one of the the inherent beauties of the standard system is that it is open and inclusive to all stakeholders, so that they can actually drive together a common understanding of even things like terms and definitions.
But to me, one of the key things is, as Alan said, one of the key things is something that Alan said earlier, that there are standards around IT and the technology, but then also standards generate around some of the other business and legal operational areas.
The application of the technology as well.
The application of technology,
absolutely.
yeah.
But it comes back to the 3 points that you made about the role that standards could play. It's around trust, it's around culture change, and it's around managing risk. And those are three of the things that standards can help to drive. We're not pretending that standards would make a fail-safe product here, or make blockchain without its inherent systemic risks, but the risks could be better managed, they could be better understood. We could give trust and confidence to consumers and users through having a standard approach.
But why is it that it is not yet clear that this need for interoperability in ecosystems for blockchain technology is not quite understood by central banks or banks? Because if you ask any central bank, like we were here in July, but since then, are they in any way in need to interface closer on this issue only, never mind other issues, because of their engagement in mobile banking extensively, or being pushed to be engaged in and leverage the mobile banking opportunity? Why aren't they not able to engage standards? Or the other way around, did you go to Bank of England, sorry, I'm putting you on the spot, to tell them I have something to tell you?
Yes, we have done that.
Okay.
I'll choose my words carefully, because there might well be some central bank, some key people on the call. But ISO is a system of public and private sector organisations that are writing standards that are intended for voluntary use. So there is two cultural and endemic issues that central bank governors face when they interact with standards bodies. One, they have by definition a national purview, so ISO clearly has a multinational purview, and this is not regulation, this is voluntary standards. So for both of those reasons, I think culturally it is a challenge for central bank governors to, dare I say, give up some of their legislative power, regulatory power, to an organisation that is writing documents that are intended, in the most part, for voluntary use. So there's two challenges there for central bank governors. It's not an excuse, I don't think. I think central banks should take a big interest, because it does offer the opportunity to unlock the power of fintech and the power of blockchain technology.
Now, the hype will not continue, because it's becoming kind of distributed in itself. And most likely that the banks will probably become outdated, one would say, and again, I don't know who is online at the moment, but they could become crypto banks, cryptocurrency banks only. I mean, we're not talking about like 2017, 2018, but it's most likely that if the technology and the application, particularly related to data, will evolve, there is no reason why a cryptocurrency-based bank does not evolve. And therefore, the traditional banks and the central banks have to change. I'm just provoking, but that's the truth of the matter.
That is actually the reason why I see those established organisations are trying to broaden out their knowledge by getting involved with the fintechs and innovation. To me, a lot of the developments today within, say, disruptive technologies, and we mentioned, distributed ledger or shared ledger or blockchain technology, that today it's very much focused on perhaps moving the deck chairs around on the Titanic, changing parts of the business process, thinking how you might improve foreign exchange settlement or netting within foreign exchange settlement, which is valid. But there is the question: is will there be foreign exchange settlement in 2 years' time? Some of the speed of the applications and the way they're being generated, we talk about the hype. This is one environment where, I listened to a lecture or presentation from the Hyperledger team in the US last Thursday, and this technology has moved. It was generated, the Hyperledger, which is almost a fabric, a layer of technology that sits above a communication system, multiple server operating environments, very much in the technology space. This has moved from originally generated by IBM and Microsoft, has now been taken over by some of the major banks who are now major collaborators to it. So that's my point. It's something that is a train that's running, and it won't. To me, it won't stop. But people such as CLS, and there's the continuous link settlement foreign exchange environment, are using the Hyperledger blockchain technology today as part of improving their process. So, there are organisations that, a bit like Andrew mentioned about the Luxembourg Stock Exchange. There are people who are using this technology today.
At level 39 in the city about blockchain technology,
good afternoon, Dr. Mahale. It's Oliver here. I've just joined the seminar.
That is excellent, Oliver. Are you in the train, in the plane, on the way to? Where are you?
I'm afraid I'm at the airport, but I'm finding a quiet corner.
Fine.
But if you have any questions for me, fire away. I can hear you very clearly.
Well, there were no questions. There was a question. In fact, I was just trying to fill in for you the examples of fintech type of startups. You are more than a startup, your company.
Yes.
So could you explain a little bit to our group? You are being watched, listen, and your picture is here. Go ahead, Oliver. And say who you are. Say who you are so that I don't come in again.
Okay.
You are Swedish by origin.
Yes.
No, that's
good afternoon, ladies and gentlemen. It's Oliver here. I'm the CEO and co-founder of Chainvine, and we're a blockchain.
Imagine he's present
provider.
here.
Today's talk is around financial inclusion. So I think
Oliver,
I wanted to start off really by saying one of the biggest things for financial inclusion in fintech is really all about identity. And identity is an extremely important factor in any type of fintech solution. Because any sort of financial transaction we do, any sort of trade we do, or transaction, your identity really is the linchpin for all of this. And we see the use of blockchain technology coming in here is extremely good for financial inclusion. So if you look at my company, we deal in digital identity, which enables people to identify with each other and transfer assets in a digital manner. We even digitize physical assets so they can actually trade in physical assets and use our system to trade these between one another. But we're not the only company using blockchain technology out there for financial inclusion. I have some associates who they run a very interesting platform, Proof of Purpose, and they're looking at tokens that can be sent to developing nations to help people with financial inclusion there. You have platforms like Jitter Lending, which enables microfinancing. So with microfinancing, what we're really looking at is entirely new business models. And essentially, when you use blockchain technology, you're able to do micropayments. Now, if you think about somebody perhaps who wants to set up a business, but their main barrier to business is that credit card fees are too high, transactional fees from banks are too high, remittance is too high. These are all the things at the moment that blockchain and other fintech providers are targeting. And there's a phenomenal amount of new business models out there and new startups working in this area. And if you have any questions, Dr. Makela, I'd love to hear some.
No, Oliver, I'm just a messenger of questions, just in case you think I am entirely predominating with my questions. When we met, you did also mention, and you came here over the central banks, that in addition to financial sector, obviously, yes, and you just mentioned, there are a few others specific already examples that work in relation to application of blockchain or distributed ledgers, such as fair trade and whatever. Can you explain a bit? Or in fact, the wine, and you already been in touch, but could you explain a bit?
So we adapted technology outside of the financial sector towards supply chain. There's three aspects really of blockchain technology that you should look at as a company, and it has very strong forwarding capabilities. Secondly, it has a great chain of custody, chain of command. So in terms of provenance, we feel this technology is very good. So Dr. Mahela referred there to the coffee case, and I'm in fact at the airport now because I'm flying back to Sweden because of this case. So essentially what we were doing was saying that when a good comes to a supply hub, it must pass through many different hands. So any product that you have in your hand at the moment, or perhaps the coffee you're drinking, could pass through up to as many as double-digit figures in the number of people who are touching that product and transporting that product before it gets to you. So essentially what we did was, in a private academic project, we built a solution around identifying everybody who touches that product. Now, not only did this show us that we could trace the provenance back from the shop shelf right to the distribution center, but it also showed us that we could actually identify everyone who had anything to do with that fair trade coffee. So not only were we looking at provenance insists, but we were looking at anti-counterfeiting.
Yeah.
So that was our main use case. When we started Chain Vine, we actually started it around fine wine. And the idea was to eliminate the counterfeiting of fine wines in the market. And wine was really a bridging case between the financial world and the world of supply chain and goods. Because if you think of wine, it is, in financial terms, it's the future. So it was a very good case of showing how the fintech technology can be applied to such things as supply chain management and provenance.
So it could be implementable to many other supply chains.
Yeah, you think about intellectual property, Dr. Mahela.
Yeah.
So if you think about, there's a lot of people in the music business using this. We've worked with some people in the music business. So what they're essentially trying to do is protect their intellectual property.
Yeah.
So they're digitizing their rights and they're putting a chain of command on those rights. So what they want to do is think about, like, if I've wrote a song, am I getting paid a fair amount of money for that? And I believe there's another group in Sweden that have actually set up a system, and they want this platform to be rolled out in Africa. So a lot of the music written there is like the artists know where their music is going and if it's used in anyone else's records or anything like that.
Uh-huh. So for instance, you could actually trace the tea provenance. If it is from Kenya, it's different from Zambia or something.
Exactly, yeah.
Uh-huh.
Yeah. I think that the number of use cases are
Malawi.
only expanding more and more. So I think somebody put an estimate of use cases around the technology with distributed ledgers and shared ledgers in its thousands. But for us at Chainvine, we really look at the chain of custody, provenance, auditing, and lightweight financial systems.
Without wishing again to exploit you, what about your success with the lawyers who are interested?
Yeah, so we did a webinar yesterday with a very senior law firm. So they're in the ranking top 10 globally. The legal industry's perspective of this technology is that it's at the same place where the internet was. There's more investment going into it in the internet, into cryptocurrencies, blockchain. And they need to understand it. They need to understand new business models. They need to understand, for their clients' sake, what kind of compliance and risk lays around thin financial technology and specifically around blockchain technology.
That's it.
So there's a huge education going on in that sector. And if you think when the legal sector is beginning to take notice, and this is the most risk-averse sector that we have, I would say legal is the most risk-averse because you're talking about compliance and governance.
That's it. Yeah. Okay. Now, the only one other thing is what the issue of the value of data that and leveraging data in different contexts through blockchain technology or distributed. Do you particularly as a business?
Well, I believe that.
Can you monetize that?
Yes, I think you can actually. I think if you can put digital fingerprint on the data that you, the data comes from you. So I think the days of Google and Facebook monetizing your data are going to be short. Because I believe in the future we will have applications that will tell me when my data is being used in any type of commercial way. And this is simply putting a digital fingerprint on all of your digital activities and being able to extrapolate that data and not having that data manipulated by anyone who has access to it.
Yeah.
So yeah, I'm a strong believer that data management is going to be a huge area, and distributed ledger technology definitely has a place to a part to play in that.
Do you employ some data analysts or data scientists in your business because of that?
We work, so we collaborate. So there's a couple of data analyst companies that I've spoken with in London, and we will begin to collaborate more with them. At the moment, it's not our core business.
No.
Our core business is we build mainly at the moment proof of concepts and pilot programs because of as an industry, it's still in its very early days. So many people want to test the technology before they have a mainstream role of it.
Yeah.
So it's very important not to throw away your legacy systems just yet.
Yeah. Thank you. Can you still be online without missing your plane?
No, I can listen to you guys.
Okay,
that's not a
fine.
problem. I'll just put myself on mute so I don't disturb you.
Okay, thank you, Oliver. Just, David, can you come in? And I don't know how I should introduce you about the fintech and BSI.
Myself, I don't mind.
Yes, please.
Okay, thank you, Mihaela. Good afternoon, everybody. So I'm David Bell. I'm the Director of Standards Policy at BSI, the British Standards Institution. And it's a joy to be with you all again this year. I haven't spoken at a couple of these events before. And it's also a joy to be asked to speak on something that's not Brexit, because about 90% of the speeches I've given in the last 6 months have been about Brexit and standards. But if anybody wants to ask me about BSI's position, I'd be quite happy to share that with you at a later date. I'm not sure of the data connection. We'll come back to that. BSI conducted a study this year into fintech and the role that standards could play in fintech. It's worth just reiterating those 2 points I made earlier about the purpose of standards and why they add such value on top of regulatory instruments, because standards are intended for voluntary use, and standards do represent a broad consensus of all stakeholder interests. So the fintech sector was a sector that wasn't naturally open to the idea of standards. Like most innovative technologies, there is a view that some patented intellectual property will help them to develop a market on their own, and they're not people who naturally have gravitated towards formal standards. So we carried out some research with a UK research agency, because the fintech market in the UK is worth something like $20 billion in annual revenues, or at least it was before Brexit. I'm not quite sure what it is now. But it's the stated aim of our government. It's possibly, well, only because the pound's reduced in value. The stated aim of the UK government is to grow fintech as a sector in the UK and to grow its export potential. So we spoke to some suppliers of fintech services. We spoke to the more traditional sector, and there is a fascinating interplay between, let's say, the more traditional finance sector and those in fintech. But it's very similar to other disruptive industries. I'll talk about that in a second. But we also spoke to others like regulators. We spoke to government. We spoke to academics, and we spoke to consumers and users of fintech products, really to understand the challenges they face. We don't talk about standards, we talk about the challenges, and then we see where standards can play a role. Essentially, there were three findings that came out of that which we're following up on. Three areas where it was felt the consensus of opinion was that there was a role for standards to play in order to help develop fintech in a sustainable way. The first was what we call the onboarding and procurement of fintech into more traditional banks and other financial service providers. Banks tend to procure the services of fintech companies, or they procure at least their technology, if not the company themselves. Onboarding them into the systems of the bank takes a very long time, and there's a whole host of reasons why that's so. Obviously, there's a lot of controls. They have to check for the ability to manage the data in a secure way. They have to understand all of the issues around money laundering and other regulatory issues. So the whole process takes a very long time. And fast-moving companies like Oliver's are not prepared or do not want to be around to deal with those kind of delays. Very often, small companies, innovative startups, will run out of capital before banks have taken them on board. So some way of getting them more on board, and we could follow a process that we followed, for example, with SMEs in the construction sector, where we've written standards to help them to pre-qualify for tenders. So rather than having to reapply each time and to put themselves through quite arduous, complex processes, to agree a common pre-qualification questionnaires helping SMEs to bid for tenders by multiple contractors. So the onboarding and procurement could be made easier, and that's one area that we're going to look at. Another area to look at is around, and you described this yourself earlier, Mihaela, it's around what you might call the taxonomy of fintech and the language and vocab that we use. And we produce this roadmap. Yes, because we recognise that just as has happened in the past with synthetic biology and nanotechnology, until you've got a common vocabulary or a common database, there is no interoperability between systems because people are talking about completely different or using terms in completely different ways. So there is a need and a potential for standards in that area. And the last area comes back to what Mike was saying about trust. There is a huge risk of consumer detriment if fintech companies are not able to demonstrate that they are managing the processes of know your customer properly, if they're managing data, if they have secure handling of transactional data and secure handling of finances. So there's a huge piece of work that could be done to, let's say, demonstrate the bona fides and the credentials of fintech companies. So those are three areas that we recognise are probably overdue for standards, and we're talking to banks and others to see if we can get some finance to be able to develop some initial documents on that, which we would hope pretty much as soon as we can would become of interest to ISO for international standards. There's a few cautionary tales come out of it because there is this conflict between, let's say, the more traditional providers and more innovative, fast-moving providers. And we draw parallels with what we see going on in the broader economy. So we're familiar today with what we're starting to call the gig economy, where the economy is moving from being a classical business-to-consumer, B2C approach, to more of a C2C approach. So we're seeing consumers providing services to consumers through sites like Airbnb and Uber and others, where you're seeing yourself as part of the economy, not just a consumer of the economy, but a provider in the economy. And what Oliver was talking about there, about being able to digitally fingerprint your intellectual property in a way that means you're selling it on and not Google selling it on, would just enhance and strengthen that C2C economy. So we are conscious of the fact that this is disruptive technology. We're getting some resistance, it's fair to say, from some of the more traditional suppliers of finance services, but working with we're looking at the moment for those who are really developing at pace to be able to sit down and think through what standards approaches are needed in their industry. So we're working with the UK Treasury. We're looking at, currently the UK government is building fintech bridges with other countries so that we can see trade in fintech services. So there's been one established already with China, one with Singapore, and I think one now with Korea. So we'd be very interested to see if that process rolls out further, because essentially those bilateral needs for standards will very quickly translate into a global need for global standards, and we hope to be part of that development.
Data chief in Bureau of Standards?
Well, we've got people who are responsible for standards around digital and data, certainly that part of it. But then, as Alan said in his introduction, standards themselves are data, and we're also very interested in how we can unlock the data from within the standards, leverage the data in other products. So certainly we've built a product which is helping medical device manufacturers, where parts of standards are being put alongside parts of legislation to help manufacturers of medical devices demonstrate their compliance with certain regulatory and standards landscapes. And through that product you can, for example, put in the name of your particular device, and it will pull up from lots of different standards the relevant bits of data that you need to comply with. So rather than a more traditional approach of looking as a standard as a book that contains lots of information, we actually see it as a collection of data, and how can you actually disseminate that data rather than disseminate the book that it's contained within.
You think, does it have more appeal to private sector at the moment than to government, or the other way around?
Well, in the UK it's a mix. It's a mix in the UK. We do see the Treasury is very interested, but clearly we're still building the regulatory landscape in the UK, as we are around the world in lots of ways, and so they're often looking to see a dual approach, where at the same time they're building the regulatory landscape, they're also referencing all of the work that's going on in industry, in standards, to see how the two can interplay. And that's a classic model of development of standards in new areas.
Okay, so thank you, David, and Mike, and we have online. Do we have from Malaysia Chu online?
Yeah.
Okay, it's a bit late there, but hopefully we keep you awake. And we have from Canada, Gabi.
Yes, I'm here.
And I understand we have Umpo, Dumelang Umpo.
Dumelang Ma and everybody.
Okay, you're in Gaborone. So, please, Mike.
I suppose my question comes, and it's an interesting point about where standards are, and it's my question is how between you, the ISO and BSI, can you move to meet the demand for standards? And what do I mean by that? I was told today, and I haven't got the detail, there's a collaboration between the ECB and Bank of Japan around distributed European Bank around distributed ledger technology. So suddenly it goes from local, maybe Lloyd's Bank here or Barclays, and suddenly there's a collaboration with someone over in completely different geography. So how do you look at those suddenly local standards moving to international standards?
Well, I would say that's not new.
It's not new, but it's the speed. Sorry, that's my.
We always face in the standards world this challenge of pace, because we have some industries that want to develop the technology in a more holistic way before we write a standard. And then we have a demand from, let's say, the user of the technology for a standard much more quickly. So balancing the needs of the users from the needs of the developers is always the challenge in pace. But we do have the systems now in place that allow us to move at the speed the stakeholders want us to move at. But we will never prevent organisations from working together bilaterally and writing a standard that works for them. in much the same way as you see the WTO trying to agree very broad trade agreements, but then actually what they're doing really is setting the landscape for individual bilateral agreements. Right, the same happens on a standards basis. And BSI's view is, if it's necessary for the European system and the Japanese system, they need a standard between them to work together, but we can't get a global consensus, then maybe there's a regional solution instead that will be a stepping stone to become an international solution. And if that's...
Yes, maybe I ask a question to you, David, because ISO was confronted recently with the request to create a technical committee on blockchain.
He has.
I have a microphone.
I have a
no?
microphone. Yeah.
Okay.
Fine. Okay.
So I'm fully equipped.
Thank you.
So this was a proposal by Australia, and there was a discussion within ISO where to put that technical committee. Should it be under the technical committee on financial services, or should it be a standalone committee because of the other applications of blockchain? So, you know what the outcome is?
It's a standalone, right?
It's not decided yet.
Dr. Natalie, could I add something there?
Yes, please, Oliver. Come in.
So that's
Hello, Oliver. We have met on the phone. Alan.
Oh, is it Alan? Is it?
Yeah, it's the same Alan. Yeah.
Okay. Bonjour, as we say in London.
Yeah.
Okay.
Yes, I think you raised a very good question there, and I had a very good answer for this last time. Should blockchain technology be purely under a financial wing? I don't believe so. I believe that finance is only driven by commodities and goods. It's driven by what we create and what we value. Finance really is a layer on top of that. So I think really to get the most out of a technology like this and to really drill down is you've got to understand why people are using the money. And I think that the supply chain and the provenance of goods and value, everything we value from intellectual property to fine wine, is extremely important.
Uh-huh. Yeah. I think that's quite... Here is private sector. That's why I said it's easier to understand private sector and tech rather than government and all the regulation and everything else. You get lost. Now, Silas, you did ask previously. You wanted to get to the bottom line, data and statistics. Do you have a question of similar nature, fintech and data, or any other question? Think about it. Because we don't want anybody that is virtual or here to go from this session without clearly understanding at least or having a clarification of a bottom line, fintech and data, blockchain and data, standards and data. Could you...
Mihaela.
Yes, please.
This is Gabby from Ottawa.
Okay, please.
Good morning, everyone. It's morning here.
Okay.
I have a quick question. I have been involved for many years with new companies, startups, innovation. And just recently I came across one company that has water remediation. We're talking mostly about lakes and bodies of water, inland bodies of water.
Like in Lesotho, right?
In Ottawa, in Canada. And this technology is very simple. We're talking about how to protect this technology, which is very simple. And I'm interested in how we can use blockchain technology. It sounded to me extremely interesting. We can protect this technology, the patent, and so that the company can benefit from it as well. Because it's very easy to actually copy this technology, but it is extremely good. So I just want to know if Oliver or someone else can actually give me an idea how that...
About patents and data.
Yeah, sure.
Yeah.
I mean,
Oliver.
hello, Gabby. Good morning. I suppose
Hello.
from my point of view, the blockchain is, let's just say what a blockchain is. It's basically a ledger, a very good ledger in the sense that it's incorruptible and it's not centralized, it can't be manipulated. So yes, I believe that you could register elements of your copyright or your intellectual property based on the blockchain. But the only challenge you really have is it's the property rights. So if you look at governments and compliance, everything comes down to property rights. So it's not really up to the blockchain to respect those rights. You can say, actually, look, we put this on the blockchain, we did create this technology in this year and it does that. So if somebody comes along 2 years later and say, actually, we created it, you have proof actually that you did actually create it and you did it in this year. But I would say in terms of enforcing it, that's really up to local jurisdictions.
Okay. Okay, so if they, for example, filed now for a patent, but they can actually do, could they actually get in touch with you and discuss about it, how they can manage?
Yeah, I mean, we have a lot of talks around this. So we've been approached by people around obviously patents is something that everyone talks about a lot. And in fact, there's a lot of people actually patenting solutions they're building on top of the blockchain technology. So it's a bit of a patent party at the moment. Excuse the
Okay.
But yeah, do feel free to get in contact with me, and I'm happy to give any information around that issue that you have. And I'm sure Dr. Mihaela can pass my details on to you.
Okay.
That's super. Thank you very much. I just had a presentation I had for them yesterday at one of the organizations, and I thought this company can be vulnerable to all kinds of copying. But the technology is super. So let's see what we can do about them with applying this new ideas and technology. Okay, thank you very much.
Okay.
Yeah, you're welcome.
Okay. David, anything about patents and data? No, not necessarily. But it's quite important, the issue.
What I would say is that this is moving faster than legislation.
Yeah.
And that what we're looking at is sovereign risk as opposed to private risk. Really, one of my questions basically relates to insurance. Who's underwriting this? Who is likely to underwrite this risk, and who's in the debate from the insurance industry to consider this as part of the insurance industry going forward?
I mean, the insurance, blockchain technology and data, right?
Well, they insure the companies that are dealing with this technology, and it's the robustness of the blockchain, which is what they would be insuring against in terms of potential litigation down the track.
Yeah.
So to me, that's all part of this mix.
Yeah. Okay. Mike, you have a point there.
I think you raised, John, a very interesting point, because I'd just say it is a very interesting aspect you brought up, because it's
really.
How actuaries would consider the information that is sitting in a third party's blockchain that belongs to a company, or the risk with the security around it.
You're saying the data.
Yeah, around the data. Yeah, absolutely. Yeah.
Okay.
But the point about standards and intellectual property is a well-worn discussion. In fact, I remember doing it in this very room in the past. But for most innovators, we expect them to embrace both, because clearly there are times when you protect your intellectual property, and there's times when you share it. And I think every innovator and everybody who is in this collaborative economy that we're seeing emerging more and more are increasingly realizing the power of a standard to be able to disseminate your technology just as widely as, in fact, if not more widely, with just the same reward as would happen if you protected and patented it and kept it for yourself. And we often use the example of additive manufacturing, 3D printing. This is technology from the 80s, which was locked in a patent for 25 years in the US, or 20 years in the US, and it was only really when standards bodies, sadly not BSI or ISO, started to write standards on it in the early 2000s that you saw this proliferation of 3D printing, such that now you can buy your own machine and have it at home, and you see people manufacturing in their own backyards. And so there is a time to protect and there's a time to share, and I think those two work together.
About 2 months ago or so, I think I did mention I was in Berlin at the Club of Rome meeting, and obviously they were preoccupied with reinventing prosperity, climate change and everything else that usually they are, but they did bring in the famous Mohamed Yunus, the one who he got a Nobel Prize for the Grameen Bank, the initial financial inclusion for women and so on in Bangladesh. And he made a very, very nice presentation after 30 years of becoming quite well known. But within the audience. It was very cruel, I thought. There were about 4 companies. One of them was supposed to be online today or here, fintech companies, who said, you're talking about financial inclusion and data, Grammy Bank, what about fintech and financial inclusion, which was, he didn't know what to answer, and it was not fair because he wasn't aware even what fintech is. He said, is there something to do with mobile technology? So there is that ongoing, actually, again, cohabitation of the traditional and otherwise, but the fintech technology, probably you don't necessarily need to understand very much about it. That's the beauty of it. You are part of it without even understanding what is taking place. And that is where, again, data, I mean, you use mobiles to pay your, are you using mobile banking in Lesotho? You are. So you're paying your mother, and your mother sends you back, and all the rest of it, isn't it? Every day. So what is that? That's transaction, that's data. And somebody kind of records that data, register that data. So, you know, please come in.
Yeah. But you raised a very good point, Mihaela, but it relates to the session that's tomorrow with Sheila Ross.
Again, yeah.
I think ignoring the implications is wrong. You need to fully think through the implications and start at a business level of how things will change with some of these new disruptive technologies, and then drive down, but fully understand.
No, the issue is, you come back, but the issue was that I don't think anybody's really waiting to understand the fintech or the blockchain or the fact that you leverage data. It's happening already. So it's not disruptive in the sense that you can do something about it before and have a strategy about it. You just about actually you integrate.
It's my concept that it's the train that's left the station.
Yeah, yes, that's it. So it's a completely different, but the value of data there becomes quite important. Alan?
In relation to our constituencies, so to speak, within the Smart Partnership, I think it would be good to stop a little on the subject of mobile banking, because this is a subject which came up last year when we had the think tank of the central bank governors, and they were coming back with because you have in Africa, you have a very big difference in terms of how much mobile banking has developed, depending on the countries. Kenya is supposed, and Namibia is supposed to be in the forefront, and some other African countries are way behind. There are at least 3 times as many mobile phones as bank accounts, and clearly leveraging on mobile banking is good for the economy. Now, standards are everywhere in there, and the central bank governors were explaining that in countries where they have several telecom operators, for instance, they have problems of interoperability of payment, etc., because payments can be made through an operator. And if you check for the current ISO work program, you will see that ISO has undertaken to develop a universal mobile payment international standard, which would bring a solution to this interoperability issue. And it's not with blockchains. Blockchains is interesting for the future, but today, well, for the future.
That is happening.
Yeah, it's happening, but frankly, for the economies we are talking about, mobile banking is certainly more topical than blockchains for the moment in terms of the quick impact on the economy. So it's interesting to see that in Africa, the take-up of mobile banking is very different from one country to the other, and some reasons for that relate to standards, and it's interesting to know that ISO is currently working on an international standard which will solve some of these interoperability and security issues that are so far a hindrance to the development of mobile banking.
Alan, I can add something there that you might find interesting. So we've been in talks with GSMA actually around this kind of topic.
GSMA is
mobile operators.
Mobile operators, global.
Yeah, so they represent all of the mobile operators, and most of mobile operators have some kind of attachment to the GSMA. And also with respect to when we were talking about Africa, because I think the leap there in mobile banking and mobile technology was much faster than we've seen in say, Europe or even the US. And one other company we partnered with was actually doing land deeds and titles registration via blockchain technology. The idea here is to, instead of building a completely new system, a new legacy system, they're going to do the same thing. So whereas the bricks and mortar banks have kind of been sidestepped or hopped over in Africa, this is the same challenge again. Can we build like a land deeds and property register that doesn't need to use an old system? Like, instead of rethinking the old system, just build a completely new system before you start. So if you're starting off at ground level, you may as well build something that is for the future.
Can I?
Omar.
I thought we have to
bring it back. I wanted to bring us back.
To smart partnership.
Yeah.
Where do we come in? Because the word trust has been mentioned many times, and that is one of the principles of smart partnership. So all these new technologies, there must be a basis, because unless it is win-win, then it is not fair, and it's probably not going to last. So the standards has got to come in to ensure that, but the inculcation of the smart partnership kind of principle in all these new things must somehow be emphasized. So what I was thinking is that what we need to do is probably to translate all these new things, big data, fintech, blockchain, and all that, to see what are the benefits to the consumers, and what are the benefits to the providers. That is something that we can do to see if there is no balance. Then from our perspective, is something that we are not comfortable with. But we can say this is beneficial to both. Then we say smart partnership movement is supporting that, because I put smart partnership principle into just 4 things. It's respect, trust, transparency, and tolerance. Trust and transparency is the core to what we are talking now. So I think somebody need to do that. Otherwise, we are just talking like anybody else. And where does it relate to us as a smart partnership kind of movement? Thank you.
Yeah, coming back, I mean, I think, from my perspective, I think that's one of the key things that CPTM needs to look at, is some of these new technologies and new environments and how they're applicable to the broader members. Absolutely.
I think the idea of smart partnership is that also it's very much related to this. One of the aspects of the distributed ledgers, the fact that it builds in trust. So the distributed ledgers and distributed technology is very much associated with the smart partnership networks, which were they to be able to be enhanced by distributed ledger networks, they probably would even be operative in the sense of applied in particular applications. So there is a direct connection, Omar, and thank you for making that between. Yes,
this is something we are interested in, because it is in sync with our smart partnership
yes.
Kind of interest and principles.
Yes.
Not just talking about it because it is there, no, because it relates to us and it is part of our belief. There's a reason for us to be discussing this.
Yeah, but this is the reason why probably central banks and the governors, or even the Bureau of Standards, the chief executives, they've been interested in it, because you're part of a smart partnership network. And of course it appealed to them, this issue of blockchain technology and fintech, because they felt an association with a code of practice. And it makes even more so than, gives you more ability to understand the application of the technology. But the technology will move on, And obviously, I was just again reminding myself about right now people are talking about blockchain. I don't know, Oliver, about this crypto 2.0, right? Oliver, are you still online?
That's correct.
Yeah.
Correct, yeah.
But that is different from what is coming up because of scalability again, the crypto 3.0. So again, this will evolve without necessarily people stopping and understanding and so on. It will evolve because of the application which are thrown in. So I don't know, Oliver, if you want to come in a little bit here.
Sure. I mean, I think the question really that most struck me, I think Joe's mentioned, is how is the technology, how is it going to help someone now? What can it do to help someone either monetize something or go into business?
Yeah.
Now, if you think about let's look at the very ground of it, and let's look at cryptocurrencies. So the ability to myself to pay you directly, Michaela, without any intermediaries is hugely important. Many barriers for small merchants to actually trade properly is merchant services cost too much.
Yes.
Many small and medium-sized businesses are really impacted by the cost of doing business. And this is anything. So if you're a small exporter in Africa and you're trying to export your goods to Europe and you have the market there, but what you can't do is sell your goods at the right price because it is financially difficult to actually bank yourself and then have banking services in Europe. Mm-hmm, mm-hmm. And this is where really this type of technology is immediately being used between people.
There are peer-to-peer type of
exactly,
tools.
Exactly.
This is what it is, the attraction. And again, that is a smart partnership feature. The ability, irrespective where you are from, to interact at the same level, so to speak, within the ability to implement in the whatever context you are, but it's a peer-to-peer type of interaction.
Yeah. I mean, if you think about it, it's phenomenal. You've disintermediated perhaps 3 or 4 people. You think about when you pay for something in a Starbucks with your Visa card. Now, before that transaction even hits the bank, you've touched about 5 or 6 different systems. And what I'm saying to you now is that actually with this type of technology, we can interact pretty much directly. So I can send you that money directly. Mahela, you can send me the painting or the good you've made.
Yes.
And if you think about it, you're getting the value of your work back and for low disintermediation. And at the same time, you're using a very trusted system. And that is effectively what blockchain does bring to that. So in the past, people haven't been able to do that because they simply don't trust one another.
That's it. Yeah. Okay. Andrew. And Boniface, you have the last question or comment. But let's Andrew.
I mean, this is just to take a step further what Omar said. I mean, in what we do, we all have these verbal things, but I had, which I've mentioned before, the 4 I's: inform, instruct, initiate, inspire. And I mentioned this once or twice. I mean, having identified, which Omar was quite rightly saying, the areas of lack of trust, the question then is, what can we do to increase trust? Not just bring people together, but actually move towards the kind of, code is perhaps too strong a word, but make an awareness of the sorts of standards which would prevent a situation in which people are disappointed, deceived, let down in various ways. So that was just to follow up what Omar said. I think we can move beyond simply saying there is a lack of trust by bringing all the parties together. Because having heard the contributions that have been made, the range of participants is massive, both geographically and in terms of professions and disciplines, and in terms of that's the state of the art for them.
Okay. I think the standards people usually have to face, and probably so the central banks, a variety of kind of diversity, very big diverse. Boniface. where you two have to go home and brief the President's office about this particular session about data, fintech, blockchain standards. What do you think besides the fact that is essential? What would you say to them?
Well, Mihaela, thank you very much. You know the answer yourself. The President has been very much interested in these sort of things. You remember when you came to Cameroon, he was talking of digital technology for the youths.
That's it.
Yes, and then of recent, in order to encourage that, what we are saying here, he feels that the future is with the youths. And recently, he offered about, I think about 5,000 laptops to students in the university who are carrying out this sort of exercise. And of recent, just about 2 weeks ago, I think about 2,000 students doing sciences in this particular area have to be recruited. So I'm saying that you know it yourself that the President attaches a lot of importance to technology development, and this ties in very much with his policies. And you can be sure that I think when next we organize Yaoundé 2, CPTM, and this is going to be an added value. Could be, yes. So everything has been very interesting, and when something is very interesting, and I love it very much, and I understood very well, I don't have any questions to. But can somebody come back to this concept of blockchain with regard to visions and so forth? We will come after that. Yes. Yes.
Yes, I'm still online.
And you have any question? I don't think so. You understood everything. Any comments?
Sometimes it's not very clear. We don't hear properly because when the comments are being made by some of the my partners. Yes, but I think the key issue here with regards to that was trust and unity.
Yes.
Because if the element of trust is questionable, then the issue of use of sending money through technology might be put into question.
Right. Okay.
So I had not finished.
Yeah, please. Just hold a second. That is.
Yes, I was just going to suggest that in order that this interesting presentation should not just be a dead letter, it should have a dynamic effect. I think those who have made the presentation should be compiled into proceedings so that we can carry them forward. Thank you.
Thank you. Thank you. Okay. Well, I mean, it was a very difficult, and we should stop now. Very difficult session in the sense that having lost the attention of a data scientist, we were trying to get more into fintech or standards, and a bit more difficult to see what means fintech and standards in data. But I think it's a very, very good breakthrough that we put together the financial inclusion and the quality and standard inclusion vis-a-vis the data, because only when we were here again with central bank governors, Omar, you would have seen real active governors who were in July. We were just announcing Brexit here, so it was 3 days after. So we're feeling very important because the only people here that talked after Brexit was the central bank governor, Mark Carney. So they were feeling very important and ready to do anything. But when we've been presenting to them the issue of blockchain and what that can do and trust and so on, they became actually, while interested, but quite not suspicious, but there was a bit of lack of trust into this new type of technology because of the risk and the systemic risk that they have to manage without realizing where do they go. And they are quite right about it because, as we said, banks, central banks, are actually in question in a few years' time. So we need to kind of help them probably to transform. There is a silent transformation that is taking place. It's unlikely that we're not going to have a function of banking, but it may be of a different nature, and that is what it's all about. So thank you very much, and we're closing now the think tanking session 2 for those who are online, watching, listening, and I don't know if any emails or text came, but thank you very much. And in half an hour, we are going to move into visioning processes and data. Thank you.
Thank you, Mihaela.
Thank you very much, Oliver, and have a good trip back to Sweden. Thank you very much, Canada and Malaysia.
Oliver, I'm waiting for you in Paris.